Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish scenario on the 4-hour chart, where preferably your wave 4 is finished and this is the beginning of a wave 5 to the upside. Wave 4 here is quite long. It ended between the 5 and the 6 fib time, and these fib times are taken from the high to the low of 2 to the high of 3, comparing wave 2 with wave 4. Now most commonly a wave 4 ends between the 1 and the 4 fib time, so this low over here does lower the probabilities a little bit, but nonetheless it is still valid for a wave 4. But again, preferably we do not see another low over here, and we see continuous movement towards the upside for a wave 5. The direct resistance areas above price is first of all the blue box here between 52.1k and 52.4k. Then we have the high of the monthly gap as well as the weekly gap that we didn't yet fill at 53.3k. Then we have 54.8k, which is the Bybit value area high of the range of 2021. And then we have this other blue box over here, 56.8k to 57.2k. Now in this bullish scenario, we're then looking on the 1-hour chart in this range for a regular flat structure. We have a 3-wave A to the downside, 3-wave B and a 5-wave C in a diagonal, which preferably is finished. The common target for a wave B in a regular flat is between the 1 and the 105 Fibonacci, taken from the high to the low of A, and the common target for a wave C in a regular flat is the trend-based fib extension, taken from the high to the low of A to the high of B, and is the 1 to the 1.236, which also here is respected. Now in this case, we're then looking for this move to the upside here to be a wave 1, followed by a wave 2 and continuation to the upside. For a wave 2, the common target area is the blue box here between the 05 and the 786, 51.2k to 50.8k. A less common target is the 382 to the 05 area, 51.4k to 51.2k, and the 886 is a level you do not want to hit if you're looking for a wave 2, sitting at 50.6k. It really lowers the probabilities for impulsive continuation, and the invalidation for this scenario is price hitting this low over here. Now to the downside, we do have an interesting support area, the blue box over here between 50.8k and 51k, which is also in confluence with the golden pocket and the 786, both common targets for a wave 2. Now the alternative, a bullish scenario on the 4-hour chart, is that wave 3 ended at the high over here. So instead of wave 3 ending here and this high being a wave B high, we now move this wave 3 one high to the right. It does impact the lower degree Elliott wave count inside this wave 3, as now this has to be a wave 4 and this has to be an ending structure in a wave 5, and it's a little bit less nice, hence the reason it is an alternative. But nonetheless, if price is going to take this low once again, this is your bullish scenario, where here the common target area for 4 is between the 236 and the 05, 50.3k to 47.4k. Less common target is the orange area, the 146 to the 236, 51.3k, 50.3k, and then the 0.618 is an invalidation for a wave 4, after which we want to see a move to the upside in a wave 5. If price takes this low, it also increases the probabilities for bearish scenarios, where we are looking for a 1, 2 and a bigger wave 3 to the downside, or a corrective A, B, C. Preferably your diagonal is already finished, your wave 1 or A is in, and that is because if we are counting this as a 1, 2, 3, 4, 5, then wave 4 went to the 886 Fibonacci, taken from the high to the low over here of this wave 3, which is very rare for a wave 4 in a diagonal. And also this diagonal then becomes an expanding diagonal. You can take a channel from the low over here of your then wave 1 to the low of your 3 to the high of your 2, and the moment the upper trend line is hit by a potential 4 and then a 1, 2, 3, 4, 5, you have to talk about an expanding diagonal, and an expanding diagonal is a lot more rare and therefore never preferred. The common target area for a wave 2 or B is between the fibs that I have on my chart. For a wave B, it's between the 382 and the 886, but we're already at the 05, so I removed the 382. Common target for a wave 2 is the 05 to the 786 area, 51.7k to 52.4k. The invalidation for this scenario is price taking out this high, and the resistance to the upside is this blue box over here between 52.1k and 52.4k. We did have some bearish CVD divergences in this range over here, lower highs on price, higher highs on the CVD, absorption of market longs with limit short orders, pushing price towards the downside. Now both of these bearish CVD divergences have played out, so we remain patient and see what we get. And if we then look at the probabilities of the different scenarios, and on the 4-hour time frame, the probabilities haven't changed. However, it has to be said, wave 4 is quite long in time, ending between the 5 and the 6 pip time over here, which is a little less common, and the regular flat is also less common compared to an expanding flat structure. However, flats in general are a common pattern in a wave 4 at least. On the 1-hour chart, this section over here, preferably we see price moving to the downside to enter the wave 2 target area, which is the blue area over here, which as you can see, we haven't yet touched. If it does, we want to observe the reaction for some support to give us confidence for a move to the upside, because we have bearish CVDs building over here. They already played out, but we don't want to see continuous bearish CVD divergences to the downside as price is bouncing. So with every bounce, another bearish CVD is not what we like to see. We want to see support hit and then see some proof of support. Let the chart show us it wants to move to the upside. So generally expecting a move to the downside and see if price can reach the support area we have over here, and then observe the reaction. We want to see some proof of support and not continuous bearish CVD divergences building. If price can hit the 886 over here at 52.7k, then the probabilities turn bullish, because the 886 is a common target for a wave B or a wave X, so any move to the downside has a higher probability of being a C or Y, increasing probabilities to go up at a later stage and take this high over here. If price makes another low, then the probabilities increase for bearish scenarios. However, we do have to observe the support area that we have over here to the downside as well. If we lose this support area here below price, the blue box 49.1k to 49.7k, it does increase the probabilities for a bigger move towards the downside. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.